You've purchased your first rental property, now wondering what all costs can be used to reduce your taxable income? You already heard about acquisition costs, depreciation, maintenance expenses, house payments and some other items. You're wondering which tax benefits you can get and which expenses are tax deductible? In this video, I'll give you insights into the question of how to derive the taxable income on your rental properties and which expenses can be claimed. Hi. My name is Ajay, and in this channel we're going to show you how to buy a house here in Germany. First off, I'm not a tax consultant and neither do I want to be. What I'm going to tell you in this video is based on own research and own experience. Please get in touch with a tax consultant who will provide you with more insights for your specific case. Income from renting and leasing, according to Section 21 of the German Income Tax Act, includes the renting of immovable property, in particular land, buildings and parts of buildings. Whether you rent out an apartment, a house or a furnished room is irrelevant in determining the income. Income from renting and leasing is declared as part of the tax return in Annex V. Every landlord is required to submit a part with the tax return for each of his properties. The term income means that you must determine the profit or loss from income and subtract the income-related expenses. A surplus is likely to result in an additional payment. A loss, on the other hand, will result in a tax refund, assuming you pay taxes from other sources of income, like having a salaried job. Income is generally attributed to the calendar year in which it accrues to you. Expenses are to be allocated to the calendar year in which you make them. This procedure is called inflow-outflow principle. In simple terms, you can prepare your tax return to a large extent with the help of your account movements. That's also the reason why I advise to create a separate account for your investment properties. The account I use for all of this is in the description below. The exception to the inflow-outflow principle is the acquisition cost. Since it is assumed that the building portion will be consumed in the long term due to use by the tenant, while the land tends to increase in value, the acquisition cost first must be divided into building portion and the land portion. You can find out how to make this division here. The depreciation for wear and tear, in German Absetzung für Abnutzung, is considered regardless of the payment. From the time of change of possession, the building portion can be depreciated in equal installments. Typically, buildings are depreciated at 2% a year. Exceptions are heritage buildings, or if you can prove that the building's lifespan is considerably shorter. Independent assets such as kitchens, office furniture or electronic equipment must also be depreciated over their lifespan from the month of delivery or change of possession. You can find the link to lifespan of different articles in the description below. Income doesn't only include the annual cold rent, but also the ancillary costs. Rent for attics, basements, garages, and rent for advertising space. The security deposit plays a neutral role in this context, since this is neither income nor expense. Only if you do not return the deposit fully will that part be treated as income, but at the same time, you will have expenses in the form of maintenance or repair due to whatever measures you needed to take to repair or maintain what the tenant did not leave there fully intact. Anyways, let's look at some of the typical expenses which reduce your taxable income. Annual maintenance expenses, interest paid for the loan you took, heating and water cost, janitor costs, garbage collection, insurance premium, property tax and other public charges, broker commissions, property management, tax consultancy and legal fees, and all other costs caused by the rental. Just example, replacing a bulb in the living room, for example. The majority of these costs can usually be found in the report from the property management, in case you have a flat, in German Hausgeldabrechnung. The costs will be divided into costs that can be passed on to your tenant and those which you will need to bear. In addition, account management fees, travel expenses, additional costs for meals, telecommunication costs, even office furniture, laptops, smartphones can be claimed as income-related expenses as long as they are caused by the income from renting and you actually had those expenses. The following example serves as an illustration in which only 50% of the costs were recognized as income-related expense and the remaining other 50% as private costs. We'll use this data later in our example. Your own labor is not included as an expense. So as far as you can save costs by working on your rental property yourself, you can only claim the material, but not your own labor or that of your friends for tax purposes. Hence, most investors get things done instead of doing it themselves. As long as you want to rent out the property, the previously mentioned costs can be used to reduce your taxable income, even if the property is temporarily vacant due to a change of tenant or renovation. For you as an investor, you need to take good care about record keeping. That's absolutely fundamental. Of course, you cannot prepare a tax return from your memories, and the tax authorities will always request supporting documents in the event of numerical deviations from the norm. It is therefore advisable to keep and file all correspondence related to rental income in an orderly manner. In this way, you can answer questions quickly and present receipts in case of a doubt. This has a reliable effect for tax purposes and is thus certain to be viewed positively in the future. Some investors simply put everything into an Excel file and some use tools which are available. Let's take an example. You purchased a flat on the 1st of January 2021 and now want to do your tax return of 2022. First, let's have a look at the income. You receive a monthly rent of 600 euros cold rent and 140 euros as ancillary cost for the apartment, making a warm rent for the apartment 740 euros and 8,880 euros per year. That was pretty easy and straightforward. Let's go to the expenses now. You had to split the cost of the property into 200,000 euros building and 50,000 euros of the plot. Total price of the property was 250k. Depreciation is calculated now only on the building part. Hence, we've got 2% of 200k, which is 4,000 a year. At your financing bank, the loan interest amounted to 5,000 euros in year 2022. You'll get an annual statement from the bank where you can simply copy and paste from. The overview of operating costs will be provided by the property management. Costs, which can be passed on to the tenant in this case, is 1,426 euros. And in addition to that, there are costs which you cannot pass on to the tenant. In this example, it's 458 euros. The addition to the maintenance and reserve fund does not have an effect on taxes. Property tax for this particular property was 180 euros, and this bill you'll get separately from the city. In February, you drove 100 kilometers to the apartment to check on certain things and get to know the Hausmeister. In September, you went there again to the homeowners meeting. You also had some other expenses like internet, phone, mobile, etc. This all amounted to 260 euros as mentioned earlier. So in total, we've got 8,880 euros as income and 11,325 euros as expense. Amounts to a calculatory loss of 2,445. In our case, we'll be receiving a tax refund based on exactly that loss of 2,445 for this apartment. Just beware, from a cash flow perspective, this particular apartment is positive, as the depreciation which we just calculated does not affect my cash flow in any way. So in summary, there are a lot of options to reduce your taxable income with buying and owning real estate. You will need to gather some knowledge about the taxes here in order to effectively change your taxable income. My advice would be to speak to an expert about this and get your taxes done by a professional, although you could easily do it on your own as well.